Hello, everyone, and welcome back to the J22 report. I'm your host, Johnny Market. You all know that drill. Hit that like button, subscribe if you already haven't. I was going to say, let's get into today's news, but first, just disclaimer, nothing in this video should be construed as financial advice. This is just my thoughts on the markets and commentary. I don't guarantee performance or outcome. So, anyway, let's Let's get into it. I have a couple of things I wanted to share. I wanted to do one yesterday, but didn't think it was all that great for YouTube and whatnot. So I will be trying to start a Rumble account soon. More free speech oriented. So you can hopefully one day you can follow me there too. But anyway, markets today, I find this dichotomy. The Dow Jones has been finishing in the red, I mean, even though it's small, it's still in the red, while the S&P is still in the green, and the Nasdaq is obviously going bonkers. It's the AI bubble, and I think this AI bubble is going to get really bad. And when it pops, it's going to pop. But that's the first thing. So let's get into the economic data. If you look at it, mortgage applications, those are up a lot. It's the summer moving season. Mortgage market, refi, not surprised. Look at inflation, less than expected, less than expected. CPI. So, and you've been listening to this channel, you would know that the inflation rate's going to be coming down because they are basically rigging it. This time mechanically through the SPR releases, and just not counting coffee anymore because that's gone up and too much. So not counting that, not counting items that have ruined their narrative, and then the other one just dumping market to suppress price. So interest rate decision unchanged. Get into the meeting minutes today. So basically reaffirmed. It's really a nothing burger. Hold rate steady. One cut coming this year. And I said they're going to cut because one, credibility, and two, if you go back and see my videos about the credit card bubble, the commercial real estate, I'll do one on auto loans if it comes out. But they know those three are going to be systemic and they're going to be really bad. And so they are going to that's what's going to happen. But Federal Reserve, key interest rate unchanged. Indicates slight optimism that inflation remains on track to head towards 2% goal. So aggressive, and this is why they're able to keep the markets from. This is what they do. They extend and pretend. The committee, they know they'll never be held accountable for what they say now next year. So look, committee and its closely watched dot plot indicate a more aggressive cutting path in 2025. Yeah, they were supposed to cut 6 times this year. Of course, are they ever held accountable? No. But so, and this is how they're, this is one way they manipulate the markets. They do it psychologically. They just say, oh, we're going to cut rates. And that way they're trying to suppress rates psychologically so they don't have to do much mechanic. Now they are, and look at this, more aggressive with a 4 reductions totaling a full percentage point anticipated up from 3. So what else for 20? The now sees 5 total cuts equal 1.25% points, down from 6 in March. So leave federal funds rate at 4.1% by the end of next year. So there it is. Federal funds, they want to cut rates, 2% target. The thing is, with the bubbles I told you about, cutting it down to 4.1%, it's not going to stop it. The only way is if they go back down to 0 and let inflation run run wild, which they've shown they're not going to. And this is the other thing. I've talked about this before, but job revisions data. Revisions to trouble last year was 400,000 jobs. Now, the numbers are fraudulent and whatnot. And yeah, they are. But this is another thing they do, how they manipulate the markets. They just overstate. So they beat on the number, keep the markets, keep sentiment high, and then they'll revise it down. And hopefully no one will notice. And they do this all the time. This is one way they do it, other than just outright lying, but they'll just overstate and then they'll correct it. So that's another thing. Revisions to job data. And I was looking at an article today by an analyst I respect. Market Wizard Odds issues another bullish proclamation about gold and silver. Now, before I go, my opinion is it's going to be sort of the summer doldrums. They're going to mechanically suppress the interest rates and whatnot. And if you look at it, if you look at gold, just let's do GLD. I'm just going to use GLD. It's the best thing to do. If you look at it the one day, even though it finished high today, gold, boom, boom. Let's see what time. So 9:30, it really opened up on the high, and then it's just started selling down and sort of finished, just above. And, just previous close to 14.15, which is there. And I think part of that is they realize lower inflation rates plus cuts in interest rates. That's not really that bullish for gold. I think a lot of shorts covered and then they went back in after hours. If you look at this is why, I mean, they have to eventually go back down to zero. Let's just look at Dow Jones, which finished negative. But if you look at it, see, this is where it closed yesterday. Opened up high, and that was due to low inflation rating, the cuts, but I think the fact that interest rates, and then when the Fed made their decision, it finally went up. But I think the market sort of realized that reason why it came down here below in the red eventually, even though it was on the, they realized these 4% interest rates by 2025 are not going to be enough. Of course, the S&P was actually up on the day in NASDAQ. So those are, but in terms of gold, I think that we're going to start seeing negative economic data after the election, or even more, because I just think interest rates are still too high. But here it is. In prior articles, I also outlined last year my initial target of 2428 for gold, which did exceed, and now I'm expecting we'll likely move up to 2700 region for the next rally over the coming weeks. 2700 to 3000 sort of my target before I think there's a really big crash. However, I see much potential in silver at this time, whereas gold has already seen its wave 3 rally. Silver is not. Therefore, I'm expecting a major catch-up move in silver, which can take us to the 40 mark and quite a rapid move. Therefore, my main plan tracks pattern, which suggests that this pullback consolidation can complete in the near term, sets up for the next phase of the rally I expect in the metals market. However, the next phase, he expects silver to outperform gold. So we will see. Let's hope and see if those, I think after that wave, whatever it's called, I will be finally selling some. Not saying I'm selling all my gold and silver mining related or royalty and streaming equities, but I will be definitely lightening the load. So that's all I have for today. Hit that like button, subscribe, and I will see you next video.